Hello and welcome to the HI Bull Bear Market Report for July 30th, 2018. My name is Adam Straseske, and here is our agenda for today. We're going to go over the broad market readings and then get into this week's operating plan. First things first, the barometer, bulls still in charge. This could change. We're in a sideways market right now when you look at the S&P 500. However, with everything that we look at, the technical and the fundamental factors, the bulls are still in charge. We are still in a risk-on stance on the longer term. 12-month momentum, the S&P 500 is greatly outpacing the MSCI All World ex-USA Index. MSCI All World ex-USA Index looked like it was getting close to getting down below Treasuries, but this last month has picked up. If we can have a couple good days of trading, it should finish up here before the month's end, and same thing with the S&P 500. So both of those look good, especially compared to Treasuries. As far as correction risk, it's a little bit higher this week simply because we've got a negative divergence on both the longer term oscillator and the shorter term oscillator. You can see that price has risen over the past few weeks, and the breadth of the market has declined, and so we've got that negative divergence there. We could see a nice pop to the upside, and that's what we'll like to see. If in fact the S&P 500 does make new highs, we will definitely want to see the breadth increase along with it. That would be a sign of a healthy market. As far as the weekly chart of the S&P 500, last week it finished up 0.61%, traded up for most of the week. Thursday was flat, and then Friday the bears took over. They wiped out about half of the week's gains. You know, it's good that we broke out to the trading range to the upside, but would really have liked to see the bulls be able to close the week on the high. They simply couldn't. It looks like they even closed it below the middle of the bar. So this is another weak sell signal. The trigger will be if it closes below, it trades below last week's low. You know, certainly could do it. We're so close to the highs of the S&P 500, and the bulls have a good opportunity this week to get there, and frankly they could surpass them, but they're going to have some strength coming into the market here. Operating plan for the monthly trender, still like preferreds, U.S. small caps and U.S. growth, and then here's a look at all of our weekly swings. U.S. small cap and U.S. growth, not a good weeks for them. Actually, U.S. large caps and then also U.S. value, those two outperformed these last week. Don't know if that's the start to a turn, but right now these are the leaders on the longer term on the time frame that we look at, so these are the ones that we're going to focus on. Both of them look okay. You know, we're still on pretty close to highs, just not a great week last week. U.S. Treasuries still bouncing around on support, down 0.86% for the week. Hasn't traded below support, still within the trading range, and we're still hanging in there. Australia down 0.12% for the week, basically a neutral week for Australia. Like it how it opened lower, the bears could not hold on to that, and it traded up for the week. So again, the bulls have a good chance right here to break this thing to the upside, and it looks like we're kind of stuck in another little trading range here. Good thing we did break the bull flag right here, and just want to see continued prices to the upside on this one. But we do have our stop down here. We've adjusted that up. So MSCI EAFE Value Index up 1.75% for the week. Looks good for this one. It bounced where it absolutely needed to bounce. So now the question is how many legs will we get? I would suspect at least two legs. Two longer legs, another several weeks, but we'll see if that happens or not. But right now it looks good for the MSCI EAFE Value Index. Healthcare up 1.19% for the week. Again, don't really like that long tail on top of this bull bar, but I will take a bullish week. Got a stop price way down here, and then a second purchase range close to that longer term moving average. Transportation up over 2% for the week. Looks good for transportation. You know, looks a little bit like it's ahead of the S&P 500. You can see how the S&P 500 broke out of this trading range, fell down, and now we're trying to test again the top of that trading range. Really like all the bull bars here, and we'll see if they can continue this advance. U.S. Aerospace and Defense up 0.77% for the week. You can see on this one we didn't get our first buy trigger. We waited for it. We got another buy trigger, and then finally our buy signal. So we don't have a place for a second purchase range. We actually didn't buy this in our first one and bought it in our second purchase range area. So looks good for U.S. Aerospace. Much like transportation, I do like all these bull bars here. So I want to see it break through this bear channel right here to the upside, and then of course make new highs. As far as our operating plan, new positions for this week, we like international preferreds. You know, a lot of the internationals have been bouncing recently. Got a lot of buy signals on those. We still want to focus on the U.S. markets, but international preferreds they look fine in this area. We've got a few legs down, and so if they're going to hold in this area, now could be a good time. So if we get a trigger there, a buy trigger, then we'll certainly take advantage of that on international preferreds this week. And with that, that's it. Have a great week, and we'll talk to you next time.